What's up, YouTube? It's Joe Catapaglia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today, I'm going to talk about something a little bit different. Just going through a discussion I have with a lot of people in real life here in my market, which is if I were going to start investing in real estate today, all over again, what would I do? How would I go about it? What are some of the options I think are better options? This is a little bit different than our typical, fractional real estate investing discussion that we're talking about. But it's that, I am definitely going to touch on that because I think depending on your situation, it may be the best first option, which is why I've been spending a lot of time on it. But I don't necessarily think that's the case. It just depends a whole lot on your resources. So, we're only a couple days into the new year, and I have already had several people in real life reach out to me and ask me, "Hey, can we sit down and talk?" And I want to get involved in real estate investing. I think a lot of people use this time of year to make new goals, and that's often one of them. Um, and so I thought it'd be a good time to, because I've just had that conversation a lot lately, to just sort of jump into one, tell you a little bit about how I got started, but also what I would do if I were starting over today. And so this home here, or this is actually a duplex in College Station, Texas. It's the first property I ever bought. Um, it was in 2005. I was working a job after college and was about to go to graduate school. It was a time where it was really easy to get a mortgage, and I used a VA loan because I had been in the military. And so I put nothing down, actually get some lender rebates and a rebate from my agent. Um, I paid for that by having a terrible agent, but usually if you're going to get, if you're going to get a rebate from people, it's, if they're competing on price, they're not necessarily the best. I don't know that I would do that again, but I did get about $1,500 when this closed. So I was basically paid to purchase this property. Um, I moved into one side. The other side was already rented. I got a roommate on my side and, basically lived there for the cost of paying the utilities myself. I didn't split those with the roommate. I just charged a flat fee. This is what, at the time, I don't think anybody was calling it that, but this is what people today call house hacking. Buying a property using income from the property to help you afford it. I'm going to show you, this. If you came to me 4 or 5 years ago as a new person, this would be my number one thing I'd tell people: listen, buy yourself a duplex or fourplex. House hack if you can. Live in one unit, rent out the other. Maybe even get roommates on your side, like I did. Um, but this is my market. I'm in San Antonio, Texas. I'm looking at basically every fourplex available. And depending on where you're from, these prices might actually not look that bad. Some of these that are really cheap, you'll see are just super old properties, maybe not in the easiest area to find good tenants. Um, but there are some that like I used to, you know, recommend these ones over here and these here for exactly that purpose. In today's world, though, they've gotten really expensive. So we'll take a look at this one. This neighborhood I've sold a whole bunch in. Um, haven't for a few years because the prices, this for us for a fourplex is quite a bit of money, right? Almost 150,000 per unit. You're only getting about $1,000 a month in rent per unit, and so with where our property taxes are and where rates are today, um, if you're going to live in one of these units, you're going to come out of pocket, every month. You're not living there for free. Maybe if you get a roommate, you could make it work, but it's not the deal that it used to be. But if you're, if you have a stable job and you can easily afford the payment if things don't go well, or you could, if you can carry it for a little while, if you had some vacancies, it still could be a good option. Because one of the real benefits of house hacking with multifamily is you get the benefit of appreciation for the much higher price because you have tenants helping you with your mortgage, right? So I think that's still my number one recommendation to people when they come to me, if it's something they can afford. But because these prices have just gone, these were like 380, $400,000 fourplexes just 5 or 6 years ago. and rates were half of what they are today, right? So that was something that made a ton of sense then. Today, not quite as much. An option that is maybe better for some people, and if they're in a situation where they can do it, is buying these new construction homes. We've got a whole bunch of these available, and then renting out the additional rooms to roommates. It's a little bit less comfortable of a living situation than just having your own unit in a multifamily. But it's, something that you can do on a really affordable basis here in town. Oh, let me do this. I always put the client-friendly version on so you can't see things that you're not supposed to. No, I didn't have it on that one, but I didn't scroll down to where it was problematic. Sorry about that. But so, you can see you could buy this four-bedroom, two and a half bath home, 252,000 or 253. One of the things, this is by a builder that we do a whole lot of work with. I'm sure, you could make an offer, get it for cheaper than this. On top of that, they'll buy down your rate today, so you'll have a pretty good interest rate. And depending on what you charge your roommates, it's somewhat possible to live in this home for free or for a very discounted rate compared to if you were just renting a place, right? So I think house hacking in this way starts to work a little bit better in today's world, because they're buying the rates down and because the new construction homes are still, pretty cheap. But again, I mean, you have to be willing to live with three roommates to make this work, right? You'd want to live in one, rent out the other three bedrooms. That's something that I'm seeing more and more people do. Some of them will move out and continue it as a rent by the room because although at the prices with the bought down rate, they're not working amazingly well as long term rentals today. But they're also not terrible. Um, and it really all hinges on how much the um, lender is willing to buy down the rate for you. Some of the things that people are doing is actually cutting these up. This was almost 2,000 square feet. It's four bedrooms. They're actually cutting it up into additional bedrooms. It's something that's perfectly possible to do. Maybe you rent out even more. People that are using a pad split model will take a home this size and make it six or eight bedrooms sometimes, especially if they can convert the garage. I don't necessarily think that's the best answer for this particular property, but it's something else that people are doing. And if you're going to live there and manage it, I think there's a lot of potential. It really just depends on how entrepreneurial you want to get, right? I mean, I think that's sort of the answer today is if you have to be a lot more creative than you were 3 or 4 years ago, because of rates, and just because prices are higher, right? And rents have not quite caught up yet on most properties. My team is still selling plenty of stuff. I mean, there are people buying. Mostly it's people buying for short-term rentals. That doesn't really work for someone as a house hack. I actually do have some clients that are just renting their primary residence and buying a nice house with a pool and using it as a short-term rental because that's the most profitable thing. If you can afford to do something like that, it's a great way to get into real estate. But again, I wouldn't do it if unless I had a pretty good cushion, which is not how most people enter real estate, right? A lot of people are attracted to this because they're not making a ton of money in their day job, trying to come up with a way to make, maybe to turn a little bit of work or creativity into some extra money. I think house hacking is a great way to do that. But what if you've done that and then you're looking for your next step and you don't have a lot of capital? Or what if you don't have the capital or the income to be able to do that? What's another option? And that's why I've been spending a lot of time looking at these fractional sites. And I think today, the first place I'd point someone to, well, it would depend. I'd ask, okay, what's your goals, right? Are you looking for to really learn about real estate investing, and end up making it a big part of what you do with your life, or are you just looking for, to get some exposure to real estate and as far as the income, the appreciation, the tax benefits? And depending on your answer, if you're looking to just really just be a passive investor, um, Mogul might be the place to go today, right? Like and I've talked about this one a few times on my channel. Um, you definitely have to really do your due diligence on their properties because I wouldn't invest in everyone that's on here. You can see I've invested in a couple. It doesn't mean those properties are right for you. You definitely want to check into them on your own. But I think They're presenting a pretty passive platform, where you can kind of buy and not really do much. Your money is locked up for a while, but you are getting most of the benefits of direct ownership other than control, right? You don't get that. And you can invest on here, um, I think for as little as $100, but obviously, whatever, if you're thinking about investing in real estate, you probably have a little bit more capital than that. This is the one that I put the most in on their site, and I bought $5,000 worth. The reason I did that is they were running a promotion where if you bought a certain amount, they gave you, some bonuses, and I was taking advantage of that. And this was a property that I really liked, and I think they threw in like $250 worth of this other property if you did it. And it's an interesting promotion that they did, because I liked this one. I would have bought it anyway. So this might be a good option if you're just really looking for um, the security of real estate and the cash flow. Another option is ground floor, and this is where you're buying small pieces of loans, and these are mortgages that are backed by real estate, but you don't actually own the real estate. You own the mortgage, or the entity that you invest in owns the mortgage, and you're buying these little pieces. This is something that I've been doing for a little while now, and currently own pieces of 81 mortgages. I actually really like this. It's a pretty good expected rate of return. This is basically what they're showing you here is the stated interest rate that you're getting paid. There is obviously risk of loss, and so that's why it's the expected rate. It's possible that you won't get paid back the full amount, so you could actually lose money on some. But in general, it's a platform with a relatively long track record. It could be an option. I don't think investing in mortgages is what most people first think of. I just like to mention it because it's a platform I really like. But if your thought is, I really want to get into real estate investing, I want to be more entrepreneurial, I just don't have the capital yet and I don't have the experience. I actually think I'd recommend Lofty in that situation to a lot of people. There is, and I just did a video about this the other day. There's some platform risk, and that applies to any of the platforms I ever mention on here. There's some chance that the company goes out of business or something. But one of the things there's a lot of reasons that I like this site. So one of the things that people think of when they can't house hack or in a high cost of living area is they think, oh, I'm going to buy in a cheaper market. I'm going to buy somewhere where my dollars go further, where the rent to price ratios are better. And it ends up moving them to, well, markets like Toledo, Ohio, or, um, Detroit, Memphis, Tennessee, Chicago, St. Louis, Missouri. And you can see these are actually all properties that I own little pieces of in on the Lofty platform. They're not markets that I think that buying small pieces of ones like this, it diversifies your risk a lot from just going in and trying to buy a whole property. Now, some of these places, like you could buy this home here probably for $100,000. Buy it remotely, hire a property manager. Uh, that might be something that's attainable if you're just starting out. But I think, you're putting all your eggs in one property basket. And, for me, I think it's a big risk. I mean, I've been investing for 20 years and I've owned properties remotely because I moved away from them. But I've never bought one in a market where I didn't live there already. Now, I help a lot of people buy in San Antonio that don't live here. But, we sort of set up our business to help those people. And so, try to help them de-risk it a little bit. But it is something that it's tough to do. And it takes the right kind of person. And so to be able to come on a platform like this, buy small pieces for as little as $20, $25 per piece, get the full benefit of, getting your percentage of rent, getting the appreciation when it sells. Um, some of them are levered, although there's a lot to talk about as far as that goes. But I think what I would do on here, I'd take, if I was brand new starting out, I'd take whatever money I had and I'd say, okay, I'm going to use this platform as a place to make some money, but also to really learn, right? And so I'd pick, even if you just have 250 bucks, I'd pick, say I'm going to spread that across 10 properties and buy one token in 10 different properties. But I think if you have more capital, you could obviously put more into each, but I'd want to buy in several different markets, several different properties. It spreads out the risk, but it allows me to just learn so much faster, right? I'm going to do my full due diligence on every single one, just like I was going to buy the whole property. So I'm going to look at the appraisals, I'm going to look at the inspection reports, I'm going to look on third-party websites to see, what does Zillow say it's worth? What does Realtor.com say it's worth? What does Rentometer says it should rent for? Even if it's already rented, I want to know what the market rent is. Checking floodplains, doing all that due diligence that we do. Um, just like we were going to buy the whole property, even if I'm only going to buy one or two tokens, right? Even if I'm only going to put 20 or 50 or 100 bucks into it, I want to treat it like that. And so um, you might do that for a while and decide, you know what, this is all I want to do. I want to just, it's pretty passive, but I'm using my knowledge and expertise in picking properties to make money. Um, and I think that's perfectly fine. But I think if you're a little bit more entrepreneurial, the goal should be to be on the other side of this marketplace. And so, all the properties that have been brought here recently, in their current model is there's somebody, an investor who bought the property, brought it onto the platform and sold some of their equity. Sometimes they sell a lot of their equity, sometimes they're just selling a small piece. And this is when I first got started in real estate, I used a lot of debt. I did, a lot of no money down deals. Um, in retrospect, it was extremely risky. I got very lucky to never have had a foreclosure because I went through the 2008 downturn and had at least one. I really only had one troubled property, but I didn't have a ton of properties at the time either. Um, I bought more units with a partner where they brought in most of the capital. So there's all these were different ways to do it. But when I was starting out, I wish there was something like this where okay, I can go buy my first property, um, operate it, come and sell some of my equity, continue to get paid, basically an asset management fee, and raise some money and then go buy more. And so there's a couple of young entrepreneurs on here. One in particular who I think is just killing it, um, who's using this platform as a way to raise capital to control. He's a whole bunch of properties. It's 90 Madison, 88 Madison. Um, let's look at all the Madison ones. Yeah, these three, right? All in the same area. He's got, I think, two more that he's bringing to the platform. But then I also think he owns one on another street too. But he came to the. It seems like he came here knowing a decent amount about real estate. But I think that you could start off on this platform, start making connections. There is a great Discord channel. If you only have to buy one token to join the Discord. And then, talk to people about these properties. There's people that are active in there every day. There's people partnering up to do deals in there. And so I think it's a way that if your goal is to really, make a run at being a real estate investor full time, starting off as an investor on this platform, using it as a tool to learn, and then using it as a way to raise capital later on. I don't know. To me, I think it's one of the most interesting opportunities out there. It's one of the reasons I spend a lot of time on this site. I've been slowly, I haven't put a ton of capital on here yet. I've been mostly experimenting, but I'm over time. I think I'll put more and more because it's a proper, it's a. Uh, I'm at a point in my career where I'm much more interested in moving to more and more passive vehicles. And so it's great for me there. I don't think I'll be on the operator side of this. That's not part of my plan ever. But if I were just getting started out with investing, I think that would be uh, it would definitely be high on my list of ways to do it. Now, obviously, there's traditional syndication models, and if you don't know what that is, it's basically I go out and rate. raise equity from a whole bunch of people. I just get, I find people to invest, and a lot of people start by doing that with friends and family. I tried to do that when I first started investing. I wasn't very good at raising capital. One is I'm just very risk averse, and I'm also very open about all the possible risks, and so I think that that is not super helpful when you're trying to talk to people about investing money in your deals. So I always just did ones on my own, and I used debt. I did use some partners for a couple of units, more than a couple, but uh, it was, they were people that I had a prior business relationship with, and they had tons of money, so it was, somewhat of a natural fit. But if you don't have that to try to do those types of deals, this I think is a fantastic opportunity to do that. I think that. Um, and so just that's really, I think, what my plan would be. I don't have, you know, one of the other things that people always come to talk to me about is flipping properties, and they think, oh, that's a way to build some cash early on. Um, and I think it's really, unless you have a background in construction or design or something really strongly related to flipping, I don't think it's a great way to get into the business. It's very capital intensive, right? Even if you're using a hard money loan, you need a significant amount of capital down or for the renovation. I mean, it's usually not a small amount. And if things go wrong, I think there's a greater risk of loss, excuse me, with flipping than with long-term holds. Um, and so I don't think that's necessarily a great way to enter the business. Another thing, a lot of people think, oh well, I'm new, I'm going to do wholesaling, right? Like I think that I'm going to tie up wholesaling as I go and I find a great deal. I did some marketing, or I did a lot of knocking, or all these different ways to generate the business. I'm going to tie it up, get it under contract for a really great deal, and then I'm going to sell that contract to somebody else. It's something it's never been a big part of my business, but it's something I have done. I think in the right scenario it can work, but I think that when you see uh, you know, when you see a lot of the success stories online, there's probably 95 to 99 people that put a lot of time, effort, and money into it and failed, for every, 1 to 5 that really killed it and made a lot of money. And so you kind of have this survivor bias when you see the people, when you watch podcasts and you see the people that have made a ton of money doing it. I actually think if that were there's a lot of ways it can go wrong. A lot of states are making it tougher and tougher to do legally as well. I think if I were someone that had the requisite sales skills and hustle to do something like that, I think I'd be much more inclined to just get my real estate license and work with investors selling properties, buying and selling properties for them. You can often get commission checks that are similar size to the fees that you get wholesaling. You can do it without having to worry at all about if what you're doing is legal, or if it's gonna, if the legality is gonna change. And I think that that's with the exception of having to take a little time to get your license. I think it's a much easier way to do it. That is my day job. I sell real estate full time. I only work with investors. Um, Primarily out of state investors, and so it gives me really a lot of control over my time. That might be a great way to enter the business, right? Start to do that. I do have 4 agents that are on my team now, and all of them are at different points in their investing journey, but they're with the goal of um, basically eventually just becoming their own client, right? Like just doing deals on their own and not having to have other clients is the best, to me. I think is the ideal end goal, right? Like where you're just making money off of your own portfolio and nothing else. Although I think a lot of people will realize they get bored pretty quick, and then they jump back into actually um, doing some of the client service business and whatnot. But that's sort of a tangent. But so I think that's another great way to get into the business. But it is, and it's something that if you find the right team leader or broker, you can do it part time. I have uh, two of my four agents are part time agents and are able to do it. Both of them work in property management, and then as their full time office job, and then they do this on the side, and they have a little bit of flexibility with their job, and so it makes it possible. So I think that that's a way to get started and, work on the side, really learn about real estate, make some money, some additional money on top of their day job to be able to invest. But it is, I think uh, I would choose that over going the wholesale route, despite what a lot of the internet gurus will tell you. And I don't know, that there's only one with the hat, as far as I know. So just, they don't just give these to anybody, right? Um, so yeah, I think that's really where I would start. But just to recap, if there are house hacks for small multifamily in your market that fit in your budget and you can afford and that have numbers that make some sense, I think that would that'd be my first choice for almost everybody. But you really have to you want to look at your own personal financial situation and see how that fits with it, and also what your living situation is, right? Like, I mean, not everybody has a spouse that is willing to move into a multifamily property and wants to live with their tenants, right? If that's not possible, and again your lifestyle allows, I think buying the 4 or 5 bedroom home and house hacking that way, where you get roommates, especially if you can buy one from a builder and get a low mortgage because of it, because the builders are buying down rates. I think that's another fantastic opportunity today. Um, and but then, I think the next step beyond that, I don't think I'd get into wholesale. I definitely wouldn't, remotely invest in a single property where I'm putting all my capital to work in one property. That's one of the reasons why I've been excited about all these fractional real estate investing sites. Is because they're a way for you to access individual property investments. And, I'm using them, or I would use them, just as much as a tool to learn about those markets, learn about those property managers. And so, for example, um, this property, when I bought into it, it had a manager that was doing a terrible job. I did some research in the market, found a manager that I think is going to do a great job. Got the rest of the owners on board. We voted, switched managers. They just took over, so I don't know if that's really going to work out yet or not. But I think that I gave, before I even bought this, it gave me a chance to really look into that market, figure out, how do I think this will work? I also get to look at all the notes. So like, for example, when you look at these individual properties, you can basically read all the updates for the history, as long as it's been on the platform, and see, what's gone on, what have they voted on, what type of problems have they had with the property, what have they fixed. Um, you get the benefit of jumping into a property that, in many cases, already has a tenant. It's already been owned on the platform, and there might be a management company involved. But there are a lot of novice people on the other side of some of these deals, right? That are holding the rest of the tokens, and you have to work with them, and so sometimes the votes end up a little bit weird. But there are definitely some really experienced people on here as well. And I think especially if you get in the Discord and talk to people and make some good connections, I think you can learn just an unbelievable amount. Different strategies, learn about the different markets where you think, a lot of these markets are places that I own pieces of properties in. I never would buy full properties. I don't necessarily even think they're great markets to own some of these long term in. But if you watch some of my other videos, I talk a lot about buying discounted tokens, which is basically, buying into these properties at really low, as at a really low basis. because of the way the sites work, relative to, what these properties are worth in real life. And so, for example, um, this is one that my cost basis per token is about, less than $24. I don't have a ton of tokens of it, but it's not a tiny amount either, right? Like, I mean, if I'm just starting out and you start to do some deals like this, I think, it'd be worth your time to do it. This one's currently under contract, where I should net somewhere around $37 a token. So if you look at that, that's, I mean, I haven't even done the math on it yet because I don't like to look exactly what it's going to be until it's done. But you're talking about over a 50% return, on investment in a relatively short period of time. I've only been buying these tokens for the last 3 or 4 months. Um, that sale might not go through, and if it takes a lot longer, or if the next buyer comes along and, is looking at a lower price, it could go much worse. This is one that I've been buying up, for quite a while, and currently the market price is significantly below where I've been buying it at. Although I believe, if we were to sell this asset in the real world, um, we probably get about $40 per token net, is what my estimate is. Whether or not that turns out to be the case, we'll see. But I think it's a fantastic learning tool, which is one of the reasons why I've been recommending it to a lot of newer investors. Um, but yeah, if you have the capital to buy whole properties, and you wanted to buy properties in San Antonio, reach out to me. I'm happy to talk to you about it. I don't think I've ever tried to pitch my services on these videos before. It's really not my goal. But it is something that is a first step. I've worked with a lot of investors who bought their first property remotely, because a lot of them. I've had people that live in, high cost of living parts of California, New York City, people that live in, Hawaii. A lot of them come here because their dollars go a lot further here. But so I think that's a possibility too, right? But like I said, it's really not for everybody. You want to, you know, I wouldn't do it if I didn't have the ability to easily afford that mortgage if something went wrong, right? I mean, you might have a tenant. Uh, y- when you own individual properties and you just own one or two, when you have a vacancy, your vacancy rate's 100%, right? If it's just a single unit. And so, I like the ability to have some diversification, have, a whole bunch of little properties or little pieces versus one or two big ones. Um, I don't know, more and more. It's funny because, at the same time, you don't have total control, right? Like, I would love to sell either of these properties today for what they're worth in real life. But the owners of both want, most of the owners, the other people that own the tokens, want to hold them as long-term investments. And so I will not get to, realize that profit for maybe a long time. But I think it's there. It's just, it's a matter of getting that to a sale. Where if I had made if I had been able to make those same deals for the whole property, um, I'd have complete control over when I sold it, right? So that's one of the reasons, that people wouldn't want to do this. Platform risk is another, right? And also too, if you are somebody who is in a high cost of living area, but you also make a lot of money, it might not be worth your time to mess around with. Um, some of these. I have some clients that work in the tech industry that make five or $600,000 a year, and they buy a fourplex or two every year. And yeah, they're not trying to spend a ton of time, um, learning about markets, buying a few tokens at a time. Investing $3,000 in a property, or even less. Right, this is when I've just got $78 in, or 1,500. I mean, that might not be worth a lot of people's time. And if that's you, that's a whole different scenario than, the typical person who's trying to jump into real estate to get started, right? I do have some of those clients, though. I've got some of the, doctors and lawyers, and who are just like making a lot of money, and trying to allocate that capital. If I'm in those shoes, that's not really who I was thinking about when I was talking about this today. It's not a lot of who's reached out to me recently. I feel like I tend to get those people show up later in the year, because it's more of a tax-driven investment, right? Versus a I'm going to change my life New Year's type goal. It's a, oh, I made a lot of money this year and I want to shield some taxes. So, that's uh, it's a different group of people, and usually I hear from them later in the year. I was mostly thinking about the younger, more entrepreneurial people, or people, really just starting off financially. I'm not necessarily younger. I mean, there's people that are, restarting basically after, for whatever reason, and looking at real estate as a way to make money. And I think that there's an opportunity to do this if that's the goal. I think that's really all I wanted to cover. I always forget to say, I do have links to all of these sites that I mentioned today in the description below. I'd love it if you liked and subscribed. And if you shared with me what other topics you'd like to go over. I say this quite a bit, but I've been investing for 20 years. I've done just about everything in real estate. I was a real estate attorney for a little while. I worked in appraisal for a while, lending, worked on the commercial side quite a bit. For the last several years, I've just helped people get into residential investment properties, working as an agent. I think that's the most fun thing that I do, and so that's where I've gone lately. But happy to discuss any of those topics. Uh, if any of them are of interest to people. But lately, I've spent a lot of time digging into all the fractional real estate investing sites because I think they present a really interesting opportunity for sort of new people getting involved in real estate, and those are the people who I have the most fun dealing with. It's one thing to help rich people get richer, but if you're just starting off in your real estate investing career, there's a lot of people I feel like I've really had the opportunity to change their life, right, by getting them into their first investment property or their first, second, third, and fourth. I had a young guy I helped a few years ago who, went from owning no properties to owning four in a year. He was someone who had a good income, had a little bit of savings, not nearly as much as you would think to buy that many properties right away. But so, that's a lot of fun. But then there's even more people that, maybe that's not even attainable just yet. And so that's where I think, sites like Lofty and Mogul and Ground Floor come into play, where they might give you the opportunity to accumulate a little bit more money, give you some time, but where you're still learning about real estate, looking at deals, seeing what other people are buying, seeing how they're managed. That's where I really see that opportunity. In any case, that's all I've got for today. Um, as usual, I am going to just keep making mistakes so that you don't have to. That's my tagline from when I started this channel and I was building the shipping container home and basically ruined everything, made all the bad decisions. But I still kind of like it because, I'm experimenting with all of these. If you think it's stupid that I say that at the end of every video, I'd be interested to hear that in the comments, too, because I could stop that. Anyway, that's it for today.